Hello, everyone. Today I want to talk about which stock picks I think are pretty attractive. So stock picks that I've been eyeing. Now, keep in mind, I don't have a really good view on all the stocks within the stock market. I just kind of focus on some of the companies that I think are solid, some of the companies that I think are solid and at a good price. Uh, that, but because there are so many companies in the S&P 500 or just in the general stock market, I'm not able to review all of them. So of course, there might be other options out there that are probably really attractive buys, but maybe I haven't looked into them. So that said, um, let's go ahead and take a look at a list of what I'm eyeing. So recently, as you know from previous videos, I'm in SoFi. SoFi, I think at this price, 750, it's pretty good. It's a pretty good attractive price, especially since they've been increasing their earnings. They're very very solid company. Their forward guidance for 2026 is instead of right now, which would be I think like 4 to 8 cents, it's going to be in 2 years. Um, on the low end, about 50 cents to on the high end, about 80 cents. So that's a massive increase. That's about 10x increase in EPS. And so you could see that that could warrant a substantial increase in the stock price, potentially. Everything's, of course, potentials, but I think that's a uh, really good likelihood. So that said, I've been eyeing SoFi. I'm hoping that during earnings, it continues its pattern and it goes down. So I do apologize for any SoFi bulls there. It's more so that I can get back in at a really good price and then continue to sell calls on it. The next thing that I would look into is there was a firm, I had heard a little bit about it, but I'm not really interested in it in its current valuation. I was taking a look at CrowdStrike, but I think it's also pretty well valued to overvalued, especially after that recent hit. I was hoping it would go down more, like maybe like $100. So that's and then from there it's like okay, might buy it. The other thing is the risk with CrowdStrike is because of the recent uh, uh like systems that went down as a result of its patch. It it can be subject to a lot of liability. Think about all the flights that were missed. Think about uh, all the electronic systems that were down for extended periods of time, even to this day, that require manual intervention. And so as a result, that's a lot of revenue that was lost, and CrowdStrike is going to have to, yeah, CrowdStrike is probably going to have to answer for that. So they're going to have their lawyers pretty busy. Um, the next company is Starbucks. I've been really eyeing Starbucks, especially on Thursday when it got down to $73. His 52-week low was around uh 71.70, I think, around there. So let's call it $72. So it's really close to 72-week low. For the year, it's I believe its um dividend is roughly, if I remember correctly, I want to say about like $2.40 to $3, somewhere around there. So it's has a nice dividend. So if I were to buy it and sell covered calls on it, not only would I get the covered call premium, but I would also get the dividend. So that's also what makes it really attractive for me. And I do think it has like just from like depending on who you talk to, it can have a fair price of about like 80 to $90. So it's also got some cushion in terms of price appreciation. So I would be happy to own this stock, Starbucks, because I just think it's been hammered recently from the last quarters. Ulta, I think Ulta is a good company in the sense that like it attracts attracts a lot of people. Um, I've previously looked at it before. Its EPS was kind of growing. Right now it's at a bit of a I think 52-week low, and so this is one I've been eyeing. Of course, there's the Bitcoin miners like Riot and CleanSpark. CleanSpark, I think, is overvalued right now. I think it has this. It's funny because it previously was never overvalued. CleanSpark, not really, except for the one time, like a few years ago, that it hit like $40 when it announced that it was going into Bitcoin mining. But aside from that, it tended not to be well valued relative to like Riot and Marathon because it was seen as like a small Bitcoin miner. Now that it's substantially increased its exahash, it's one of the big dogs now, and it has a premium that reflects that. So I'm not really a big fan of CleanSpark anymore. Not in the sense that they haven't been doing well. They're a solid company, but as far as their price, I'm staying away from CleanSpark unless it were to dive down to, let's say, like $10 or less. Now for Riot, I think Riot's an attractive price for me at around $9 to $10. So right here at $11, I still think it's kind of subject to to maybe like a little bit more, falling a little bit more. And that's really just because its management has been not necessarily executing, and that can be, for whatever reason. I know that they've mentioned a lot of climate changes and kind of storms as kind of one of the reasons for which they haven't really been on schedule about the exahash that they needed to have by now. So it used to be that Riot was dominating. Riot and Marathon were the two kings, and then CleanSpark kind of just went right ahead of Riot. And I don't remember if it beat Marathon, but I know Riot's kind of backtracked since then. I do want to get into it just because it has really, really high volatility. And so that means selling covered calls on Riot, you can make quite a bit of money. But because of that volatility, it also means it could drop. And I think buying it on the lower side of like $9 to $10, that's where you'll be able to, that's where I would be able to make good money on it while also not putting myself at risk at losing too much. SMCI, I would, for now, like all the AI plays for myself, I would stay away from because I think they're kind of a little well valued to a little bit slightly overvalued. So I just kind of don't want to get into them. I thought about SMCI just because it has a really high volatility when you sell options on it. For a single week, you could get up to like 4 grand. Of course, you do have to invest 71 grand, so 4 out of 71. That's roughly 5%. So you can get like 5% of your money in a week. That said, do I think it can suddenly drop like much lower? It can, right? So it was $200 this year, and now it's 7, and then it went as high as $1,000. That's not to say it won't go up from here, maybe, but I don't know. I don't know, and I don't know anyone who does know, so I'll just stay away from that right now. I talked about SoFi, it's solid company, but I would like to get it at either low sevens or some price within the sixes. Pepsi, I looked into it. Not a, it's all right. I'm just not too interested right now. McDonald's, I think it is a really attractive price. McDonald's is everywhere. It's, I see a lot of comments about people saying, kind of complaining about McDonald's, rightfully so. Like the food quality, the prices, they're just increased dramatically. Eating at McDonald's is just the same as eating now at any kind of high-end place like Chipotle or not a high-end place, but like a nicer place. You can even get like some restaurant prices for McDonald's essentially. So why go to McDonald's when you can go to a restaurant? That said, I know unfortunately people are just going to keep buying it. That's the way it is here in the US. There's going to be a lot of people who are still going to eat McDonald's, and in other places around the world as well. So in Asia markets, in European markets, they're still going to eat McDonald's. It's yeah, just people love it. I understand maybe there's like a nostalgia factor, and then as far as convenience, I guess. But it's, just personally, I don't think it's healthy food. I think it's a bad price. But do I think people in general are going to keep eating it? Yes. Do I think it's a low price? Yes. So for that, it's likely to keep increasing. At least I think. Um, Lululemon is one that's had a significant price increase last year. It was up to like the 500s, and now it's cut to half. It's at 52-week lows, and I do think that this is a company that can garner more attraction by the public, even though kind of things are tough in terms of the economy. People are still going to buy kind of like high-end designer clothes. So I do think Lululemon can have a bit of a comeback in terms of its higher profitability. Um, and I just think more recently there's been a bit of a pullback because overall as you'll notice, there's been a bit of a pullback. Um, so it's tough to say whether Lululemon will definitively come back, but I think Lululemon might be attractive at this price. At the same time, there's no rush. There's always opportunities out there. PayPal, a little bit of mixed about PayPal. PayPal is, from a value perspective, it looks good. At the same time, its revenue has been stagnant in a sense. Its earnings have been kind of stagnant. Um, they're giving quite a bit of percentage of how should I say, stock compensation. So a lot of the money, the cash flows is going towards stock compensation. I think it was like 30%, even though they haven't been really doing that much. They have announced buybacks. I think like $5 billion worth of buybacks, stock buyback program. So that's a really big upside for it. But I just think PayPal is, I don't know, the fact that they're kind of the management is draining the company with those stock compensations and and uh and that there's not really a growth within there. I still think it's a solid company, but if there's no growth, if there's limited growth, if there's limited earnings increases, then I don't know, I'm kind of reluctant about it. I like it sometimes, I don't like it. It also has a pretty good volatility. So you can sell covered calls on, or I could sell covered calls on it and make some money on it, but I don't know. If let's say if it were to get down to its 52-week lows of $50, then I would definitely be a buyer. Right now, I'm a semi buyer, so I would buy it if there's nothing else. Otherwise, I would kind of stay away. GameStop, no, any kind of meme play, I don't think it's worth going. I think GameStop is, in terms of meme play, is better than AMC. AMC is just like hemorrhaging money like left and right. GameStop is not really making anything. I think it's making like, I forgot, it's almost making nothing. It's really just, I don't know, whenever I talk about GameStop, AMC, or any kind of meme stock play, it's just it's not based off of its value, it's just based off of its hype. It's musical chairs, right? So you hope that one other person is going to buy it for more than you bought it, and then they hope that another person is going to buy it for higher, not because it's worth more in terms of like its value, but just because you hope, right? It's just hopium. And so that's why I don't like talking about these meme plays. They're not very uh you're not buying it because of you think it has actual value to it. You're just buying it because you think someone else will buy it. That's pretty much it. It's kind of like an NFT in a sense. Um, at least that's kind of how I see it. Next up is Nubank. Nubank is really a solid company. It's been growing quite substantially. Its EPS. It's it's one that's just been also on a tear in terms of its price. It's just been going up and up and up. And so that's why I haven't really bought it. Also its options premium is really, really low. So I don't even like selling covered calls on it just because you don't really get much of a reward. You just um at the same time you could probably buy leaps, or I could probably buy leaps and then make more money off of it that way. Or sorry, buy a leap and then sell calls on it, or just buy a leap in general and maybe make more money off of it that way. That's another way that I could play it since it's not worth that much in terms of its premium. There's things to do, but because of its high price, and they're such a good company, but because of its high price, I kind of stayed away from it. Nvidia, like I said, AI, kind of stay away from it. This is where I just kind of watch the general market. Shift4, solid company. It's also been increasing. It's very similar to Nubank in that sense. So that's why of the three, let's say Shift4, Nubank, and then SoFi, I prefer SoFi because while they are solid companies, SoFi is the one that's being punished. It's consistently gone down. And so that's why I see it at the best price relative to the three. Shopify, I don't know too much about Shopify to be able to comment on it. I just kind of looked into it to to see if it's a good price, but I'd have to take a look back at it later. Hershey's, I did take a look into it because it's a dividend play. Um, at least for now, I'll stay away from it. It used to be at a lower price. I think it's got to like the 170s, 180s for its 52-week low. Oh, the J. Trump stock. That one is gonna, in my personal opinion, I think it's gonna plummet come September. As soon as Trump is able to sell his shares in there. So because right now he's restricted from selling shares, but in September, I believe, he should be able to sell his a massive position in of his shares, and so this will, in my opinion, I think it'll sink like a rock. It's just more of like another meme play. It doesn't make anything. I think it loses money, and there's nothing really to it except for like if you like Trump, then you like the stock. That's pretty much that's pretty much it. At first I was interested in it just because it had high premium, but then it's not really worth anything as its underlying value. It's like it's like, for me, in my personal opinion, I think it's just like a social media, like a third rank social media platform. So there's nothing really to it. It's just like I said, it has its high valuation because of the name. And then that's not just my opinion, that's the opinion of multiple people within finance. So you could talk about all of them and kind of like stay away from it because there's not really value to it. Reddit, Reddit, I'm not too big of a fan of Reddit because I don't know how they would make money. I don't really understand the business model very well. I understand they have people's data, and I think have a contract with Google, if I'm not mistaken, to sell people's data so that they can uh, so Google can improve its AI, things like that. So they can make money off of that. So so if you're on Reddit, you're getting your data sold right to Google. That's just something to consider. But I don't know how sustainable that would be if it's like a one-time cash infusion or if it's like like a set of contracts, and if they're with Google, can they partner with other ones, companies? And I just don't really see the draw of Reddit. So that's why I choose to stay away from it. Seems more of a hype play than or maybe I just don't understand the business model. Etsy, I can't really comment on it. I know that it's fluctuated quite a bit. I know it's a way to kind of sell your products, but don't really have a comment on that. Tesla, I used to think was a good company, but now it's um, the thing is that there's a lot of options for purchasing EVs. There's like a good one is like the Chevy Bolt that's actually way less than the Tesla. There's also like the Nissan Leaf, the newer versions that can drive longer. There's more kind of higher end electric cars as well. So Tesla doesn't really have a it still has a moat in the EV space, but I think in terms of price, it kind of lost its advantage to, I would say, like the Chevy Bolt. Now, if people don't like that style, I understand, but I think there's more affordable kind of EVs out there than Tesla. The other thing is Elon. He's kind of a foolish person. Not in terms of like probably business acumen, but in terms of just or not in terms of perhaps mechanical engineering, let's say, because I understand that he does have the intellectual capacity to, of course, be able to like perform his projects. That said, and manage. But that said, he does kind of, for lack of better terms, speak poorly in the public. And as a result, it just kind of hampers his stock. The other thing is he over promises and under delivers. How long has he talked about full self-driving, FSD, and how long has it been like next year you're gonna get it? Next year you're gonna get it. I've been hearing that for several years, and so I understand if you let's say like if you have an emotional attachment to Elon, then you know this might come off as kind of offensive, but it's just that if you take a look at it objectively, how long have realistically, how long has full self-driving been promised, and is it here today? Ask yourself that, and if not, then you know ask yourself if from an objective standpoint, if he's actually delivering. No. The other thing is the robo taxis. Robo taxis was kind of the catalyst for this stock to go from I think like 140 all the way to like 260. Uh, and that was just hype, to be honest. Yeah, there's going to be some money within robo taxi, but is there going to be a lot of money? Perhaps not, right? Like think of it, if it were to replace Uber, okay, if it were to replace taxis, not everyone would go into it, not everyone would opt in for it. Look at Teslas, right? So there's a significant number of people who purchase Teslas, but not everyone purchased a Tesla. There's still a lot of people purchasing ICE vehicles, and there's still significant number of people purchasing other EV options. The same thing with taxis. Other people are going to prefer still your traditional Uber, Lyft, and regular taxis. And also, are they going to have the ability to have the market penetration in all different markets? So say, for example, in California, they might be able to push their robotaxi in a few years. But let's say in the Midwest, they might not have robotaxis there and so forth. So it's always important to think about if a new product is mentioned, how realistic is it to generate consistent cash flows and you know be profitable and increase over time. I so that's why and then of course the procrastination, the kind of it'll be here next year. And in the most recent earnings again, Tesla was saying, you know, oh, I know we promised robo taxis, but it looks like it's going to be delayed. And it's just kind of the traditional it's par for the course with Tesla. So that's why I'm not a big fan of it, mainly because of that inability to deliver. Next up is this one is Victoria's Secret. I think it's a pretty good company in the sense that there's a lot of people that go into it. I know it has substantial amount of debt. So that's the downside, especially in this high interest environment. If we were to go back down to low interest environment, then I think this would be doing much, much better. But because it's getting a lot of its money drained due to all of those debts that are maturing, it's not a good pick for me right now. And of course, it's actually pretty up from its 52-week lows of like $13. So that's another reason. Fubo, I took a look at it just because Jeremy, the stock investor, talked about it, but I'll be honest, I would stay away from this. I don't really have the intention of ever getting into Fubo. Roku, I took a look at it. I didn't really understand its full business model, so I'll stay away from it. Here's also another Jeremy's picks from the Cheesecake Factory. I don't know, restaurants are pretty low margin business, so I didn't really ever get into it because restaurants, because they're low margin, that means they tend not to move around as much. Same thing for generally like fast food companies, even McDonald's, which is really nice. It gets more of its revenue from, yes, food, but then also from its property values increases and its franchisee fees, right? So like it's the franchise owners have to pay a certain amount. For Cheesecake Factory, I don't know if that's the same deal, but it's a potentially a good price, but I don't know if it's a solid company. Google's down recently. It went down as low as 130 when there was all this kind of pessimism around its AI Gemini. Nowadays, and then afterwards it peaked up, hitting almost $200. Then it went back down to 167 on earnings. It had good earnings. It's a solid company, but I still think it's pretty well valued. I think it has a PE of about 23 or 24, somewhere around like the low 20s, which is pretty good. But at the same time, I think there's better opportunities in terms of value. It's a really solid company. If this was once again at 130, I would buy it without a doubt. But because it's at 167, I'm not buying it right now. Spectrum, Charter Communications, which is Spectrum. This one got down to like $240 this year, and now it's at 360. So this one would have been a good buy. It's just that with Spectrum, how many people purchase cable nowadays? Uh, I'm not a big fan of it. I did think there was some value in it with such a low valuation and because it had such a good balance sheet. But like I said, since I did think over the long run that it's going to go down, its business is not really kind of scalable, or it's not scalable into the future, because people are kind of going into streaming services that I just don't really have confidence in Charter for the long run, so I kind of stayed away from it. Ford is just, its price doesn't really move too much, and then also generally speaking, and then also it recently just dropped dramatically from 14 to 11 on good reasons, because just vehicles in general right now, they all should be going down because it's vehicles are way too expensive. Each version of vehicle that's coming out, I forget, each model, I guess, or each trim level is always being sold at the highest, at a higher and higher value. Think about pre-COVID prices for your vehicle to now COVID prices, or post-COVID prices, substantial increase in car vehicles. So even though car prices have gone down, quote unquote, about, I think like 30-40%, they're still up substantially from pre-COVID prices. So right now, my recommendation, like for me, what I'd rather do is I just keep the car that I have and just keep running it for like seven-ish years. And then once that's done, I'll just get a different car that once again will be at a kind of lower price. Kind of like I said, like the Chevy Bolt would maybe be the next one, which you can actually buy used for maybe like 15K. And then if you're able to get hopefully they'll still have it, but the federal tax, not tax deduction. I'm not sure if it's a tax deduction, but essentially you could get like $4,000 off the vehicle. Then a 15K car would be 11K, which would be a solid price. Of course, you'd have to pay like your taxes and your registration fees and things of that nature. But what I'm trying to say is for cars right now, I don't think these are these are good, in my opinion, good kind of plays just because the car market's going down. And if you don't believe me, go to the dealerships and see all the kind of cars just sitting on the lots, all the dealers struggling to sell cars. And yeah, that's it. Here's Spirit Airlines. Spirit Airlines, I thought has the potential to go up, but in reality, it's hemorrhaging money as well. It has the potential to go bankrupt. So because of that, I would just stay away from it. Management has said they won't go bankrupt, but they're gonna have to raise cash. Otherwise, they could go bankrupt within the next year or two. So that kind of can put your investment really at risk. For myself, if I wanted to put some money into it, I would only put a small fraction of my portfolio into here, maybe like 5% or less. And at that point, it's not really worth it. So I just rather stay away from it. Verizon, uh, pretty good company, except once again, lots of debt. So if it was low interest rates, then it would be solid. But right now it's not. So I'll kind of stay away from it unless it were to go down to mid 30 prices. So at $35, $34, then I would get into it. Another Bitcoin miner, it poison pilled itself. So it was like diluting itself quite substantially to fight off Riot. I wouldn't get in here just because of that poison pill that it used. USB Bank, nope, I don't want to talk about that. Citibank, the banks, I think they're kind of well valued right now. I'll just stay away from them. Snapchat, never really liked Snapchat. Did when it hit $10, I thought, okay, it's a good price, but is it a good company? I don't think so. So I kind of stayed away from it. Meta, excellent company in terms of its management, in terms of its earnings, profitability. So do I think it's a good price? No, I think it's kind of overvalued right now. So for that reason, I'd stay away from it. When it was $100, $200, yeah, that's a great price. But now it's well valued, so I'll just stay away from it. PathUI, I don't really understand its business, so I stayed away from it. This is a gas company, Energy Transfer. I'll stay away from that. Palantir, kind of overvalued in my opinion right now, so I'll stay away from it. These are the ARK investment funds from Cathie Wood. You can go into them, but there's the expense ratio, and then it's just maybe better to go into, for myself, into individual stocks. Right now, any stocks from the Asian markets, I kind of stay away from just because I'm more familiar with, I prefer to invest in what I know. I don't really understand the like different the Asian markets, well, what's going on there with respect to the government, with respect to how like the finances work. And because I don't understand it, I'd rather not participate in it and potentially lose money. Amazon, solid company. I think once again, well valued. AMD, I think way overvalued. Way overvalued. I think its PE is ridiculously high. And it's got a small market. I think it's a really good company, but I think its price is just ridiculous. Forgot what GAN was. Here's Valero. This is an oil company. Right now, I think oil companies are pretty overvalued. This I remember during COVID, this was down to $30, $35. I wish I had kept it. I had bought quite a significant amount, but then I went into the Bitcoin miners. So yeah, this would have been a 5x play. But anyways, Costco is always solid, but it's just because it's so solid, it's always overvalued. I tend to think so. It could still be a good play, but you're always going to pay a significant premium to buy Costco, at least in my opinion. Apple, recently it's been overvalued. Same thing for Netflix. All the big magnificent seven. They're pretty well valued. Planet Fitness. That one's a pretty fun one to say, Planet Fitness. This one has been pretty stable in terms of its price. I haven't really looked into it recently. I used to look into it before, but I think right now might be not a good value. So for now, I'll stay away from it. This one is like a renewable energy source. I kind of, oh no, BP. No. BP is oil. Sorry. Yeah, BP is oil. Here's Berkshire Hathaway. This is Warren Buffett's company. Yeah, it's just, solid, consistent. He knows what he's doing in terms of investment, of course. And he has a lot of cash on reserves. I forget how much cash he has on reserves, but he's waiting also for some kind of, I think, correction in the market, and then he'll deploy his cash. So he's playing it pretty smart. He's still gaining value, but he's waiting for to deploy his cash when things go down. Um, Boeing, I think Boeing's been pretty terrible. I don't think it's a solid company. I think it's too big to fail in the sense that the government won't ever let it fail, just because it's used in a lot of aerospace and defense. But I think it's like finances pretty terrible. I didn't ever realize this until I looked into it like more personally. And so I would stay away from Boeing, or for myself, I would stay away from Boeing. Um, just because of its, even though it is too big to fail, it's had a lot of negative press recently. It actually just pled guilty to federal charges, and don't really know what that means in terms of its contracts. So that could be a hit, but I don't know. There's just a lot going on with it. Here's just the General Mutual Fund, American Airlines. Right now, airlines tend to be a little bit overpriced. This is Nordstrom. Nordstrom, similar to Lululemon, kind of a little bit higher end clothes that are sold there. Could be a good play, could not be. This is one like I'll evaluate if it were to go lower. Uber, I've never liked really Uber or Lyft. One, from like a moral perspective, I think they're just kind of pretty terrible to their drivers. But number two, it's because um, I don't know how well they can keep increasing their earnings consistently. So I'll just stay away from that. Zom, I think that's a gas company. Let me open it up. I forget what it is. ExxonMobil. Oh, okay, yeah. It's an oil company. ExxonMobil, once again, oil companies tend to be a little bit overvalued. Chipotle is one I did want to talk about. Chipotle is very overvalued, in my opinion. It's been overvalued. Uh, and so as you can see, it last quarter it did increase its earnings substantially. So it's something that it's been impressive, but even then, does it warrant a value of $49? Nope. I think yeah, it's probably more in line with like $40 price. So I think even though it's gone down from like $65 to 50, I still think it has more room to fall. Um, let's see. Uh, Qualcomm, I haven't looked in Qualcomm. I haven't looked in this one in a while. This one's uh, I don't know if it's a rate or this is like a property investments. Haven't really looked into this one. OLED, haven't looked into this one. Square is one that I've been thinking about owning. Square, if it were to go down further in price, I would be pretty interested in it just because it's another fintech company. As you can see, it's been going back in terms of increasing its earnings. You can see that it has a fair value of 90. Take what you will from this. Right now it's at a 60. If we take a look at its 52-week low, however, in the past year, you can see that it was down to like $40. So quite significant in terms of volatility. I would kind of love to sell options on this one just because you'll notice that its earnings are going to come out, I think, not this week, but next week. And so that's why you could see if I were to buy this at $60 and sell a covered call on it, I could make $400 or $4 out of the 60. So I could make 4 out of the 60. That's 1 out of 15. In terms of price percentage for like 2 weeks, that's 6% of your money. That's quite a bit. So if it were to stay 60 or above, that's 6% of the money I could make back on it. So that's one that I might get into just because its volatility is really high. And then let's say worst case it goes down. Well, at the very least, my new cost basis will be 56. And it's getting a lot closer to that 40-week average. I think stock is pretty solid company. I'd have to look into it a bit more. But that's one that I've been eyeing. And that's kind of the list I've been going through. Like I said, it's a very limited stock list. Um, Oh, and of course, Robinhood. Robinhood, I think it's had its significant ramp up from I think like under $10 this year to above $20. This just happens whenever there tends to be an increase in just like an interest in the markets. So more people are investing again as things are going back up in the market, and so that's why Robinhood is seeing its increase. I think management is incredibly intelligent in all the products that it's making. I don't just say this because they actually, because I use their. I don't just say this because I use their brokerage, but I say this because Their UI is really, really nice. So just in terms of like, I do have a Fidelity account, and I've also seen Vanguard accounts, and those are, I'm not a fan of their UIs. They're not as interactive. They're not as great relative to this one. So that I get impressed with that. But also their products. Look at all these different products that they have within here. Um, it's just a really good company. But that said, just because it's a solid company doesn't mean it's a good price. If it were down to 15s or below, then I would get into Robinhood. But because it's not, I'll stay away from it. So I hope that that made sense. I know that we tackled in a lot of companies. That's definitely probably more than 15 companies that we discussed. Those are my thoughts on what I've been eyeing. Some of them more likely to hit than others. And you could probably see from my position, I tend to focus on one just so that it's easier for me to hit. But if you were to know about portfolio theory, just to decrease the amount of risk and increase your profits in general, it's good to diversify into typically around five stocks. After about 10 stocks, you don't really see a boost of like security from diversifying more than 10. But for me, I think five stocks would be good to have. And so that way so that way if they're not correlated, I can benefit from that. So if one stock goes up, I can sell that position, and while another stock goes down, I can either exit out or add to that position, right? So I can have more plays to work with and just have more positions where I can continue to make money. Whereas if you're just in one stock, like I'm in right now, this is not a good idea, because if it goes up, then okay, I'm making money. But if it goes down, then I just kind of have to wait it out. Whereas if I was in multiple stocks, if it went down, that's okay. I have other ones that are probably going up, and or I have more likelihood that other ones are going up, and then I could kind of get out of or take some money from those, put the money back in this one that's down, and just have more flexibility in terms of the plays that I can do. For now, at least at 50K, I'll probably keep it at one stock, and then once I get to more closer to the 100K mark, I'll probably do 2 to 3 stocks. But that said, thank you so much for watching. If you did watch, I appreciate it. I hope you have a wonderful day, and I'll be recording some more soon.